More than just business news, we're news for business people.
Hello and welcome, and thanks for choosing Bloomberg Quint this morning. You're watching Daybreak with me, Alex Matthew. First, let's look at the headlines. The cheer in Asian equities seems short-lived after markets opened lower, and that's after US President Donald Trump fires his Secretary of State Rex Tillerson, potentially throwing policy-making into a limbo. Trump has said that he's replacing Tillerson with CIA Director Mike Pompeo. The RBI goes into damage control mode after the PNB fraud and discontinues letters of undertaking and letters of comfort as trade credits for imports into India. ICICI Securities lowers its valuations just a week before its IPO opens for subscription. And BJP Tripura Chief Sunil Deodhar says the left parties cannot survive outside power. Let's head to international markets now, and technology stocks led a broad sell-off that dragged Wall Street lower on Tuesday and saw the Nasdaq Composite end its longest winning streak in 5 months. Here's Bloomberg's Abigail Doolittle with a report on everything that happened in that market.
It was a volatile day for stocks in Tuesday's Wall Street session. The Dow, S&P 500, and the Nasdaq all started higher at the highs. The S&P 500 up 0.7%, but the three major averages all finished lower. The Dow and the S&P 500 down by about 0.7%. The tech-heavy Nasdaq down 1%. Now, it's not clear what the trigger for the reversal, the bearish reversal, was. In fact, the second bearish reversal in a row, at least for the S&P 500 and the Dow. But it could have something to do with uncertainty around the dismissal of Rex Tillerson as Secretary of State. Relative to the pullback, it was broad-based. The worst sectors for the S&P 500 were technology and the financials. Tech down sharply, both of those sectors down more than 1%. And some of the big tech names dragged on the tech sector, including Microsoft, Facebook, among other names. But the chip sector within technology really underperformed, down more than 1.5%. Qualcomm, a big laggard on the day after President Trump did block Broadcom's takeover bid for the company, plus a few of the Apple suppliers weak, such as Skyworks and Qorvo, on cautious comments from Morgan Stanley. As for that weakness for the financial sector, lots of the big banks down more than 1%, including JP Morgan, Bank of America, Citigroup, Goldman Sachs, among others. That probably reflected the fact that yields were lower. That is thought to be not a positive for banks, could weigh on their net margin interest. And of course, the fact that yields were lower, that tells us Haven bonds rallied. Price does trade inverse to yield. So with stocks lower and bonds higher, there was a risk-off tone to Tuesday's Wall Street session. In New York, I'm Abigail Doolittle, Bloomberg News.
Just a quick mention here of U.S. macroeconomic data. The U.S. CPI, or consumer price inflation, came in at 0.2%, in line with the median estimate of economists that are polled by Bloomberg. But the big talking point from yesterday was the fact that President Trump fired Secretary of State Rex Tillerson, setting in motion a shake-up of the administration's foreign policy team. What's interesting, though, is that Trump announced Tillerson's firing in a tweet shortly before 9 a.m. Washington time, saying he would nominate CIA Director Mike Pompeo to fill the void. But it was several hours before Trump discussed his decision with Tillerson. Bloomberg's Joe Sobzik has this report.
One of the things that may be significant is that Pompeo, if he does in fact have Trump's confidence and is in alignment with him thinking-wise, he'll be able to go into meetings and discuss things with his counterparts overseas with a little more authority. That Tillerson never really had Trump's ear. They were not on the same wavelength. So that made it difficult for him to engage in any sort of negotiations or discussions because his counterparts would figure that Trump could change his mind, being more in line with him on a number of issues, may be able to bring that back into the State Department that it was lacking before.
Now, outgoing U.S. Secretary of State Rex Tillerson addressed the media late last night. He said that he will ensure a smooth transition at the Secretary office. He also highlighted improvements in U.S. relations with North Korea and its South Asian policy as major achievements of his tenure.
With the announcement on my very first trip as Secretary of State to the region that the era of strategic patience was over, and we commenced the steps to dramatically increase not just the scope, but the effectiveness of the sanctions. The Department undertook a global campaign to bring partners and allies on board in every country around the world, with every embassy and mission raising this to the highest levels. And at every meeting I've had throughout the year, this has been on the agenda to discuss. The adoption of the South Asia strategy with a conditions-based military plan as the tool to compel the Taliban to reconciliation and peace talks with the Afghan government finally equipped our military planners with a strategy which they can execute as opposed to a succession of 16 one-year strategies. This clear military commitment attracted the support of allies broadly and equipped our diplomats with a whole new level of certainty around how to prepare for the peace talks and achieve the final objectives.
Now, it's possible that worries of a trade war could be stoked once again. A CNBC report quoting a source says that the U.S. administration is preparing a trade package that will increase tariffs and impose restrictions on investment against China. Now, it is interesting at this point to then look at a conversation that Mark Mobius had with Bloomberg's David Westin about the fact that talk of trade war is overdone. Listen in.
Well, what we do is we look at how much fear there is out there. I mean, if there's really a fear of a trade war, there are probably opportunities because it won't be as bad as it appears. I mean, if you just look at here in the UK, Brexit, and Europe and so forth, there's no way they can have a real Brexit because they're just too closely tied together. And this is true of Latin America and other parts of the world.
You believe the market may be overpricing risks such as NAFTA, or for that matter, even trade wars more generally, so that asset prices are actually artificially depressed?
Yes, I believe so. I think all this talk about trade war is overdone. I don't see that happening. And you're going to see in the U.S. the negotiations, the bilateral negotiations are beginning to have positive effects. You're going to see positive news coming out. And so we've got to be aware of that.
Let's take a look at the Asian markets now. And the Asian markets have understandably opened lower, with the Nikkei and Kospi slipping almost. In fact, the Nikkei has slipped. It was initially about 0.5% lower. It is now nearly 0.9% lower. This comes after the personnel shake-up that we told you about in Donald Trump's administration, and that spurred concerns of a unilateral approach to trade, national security and foreign affairs. In Japan specifically, a controversy stemming from the sale of land to an educational institution with ties to Japanese Prime Minister Shinzo Abe is in fact threatening to throw the government's plans for the economy out of gear. Let's move to India now, and Darshan Mehta is here to set you up for the day's trade and essentially to tell you what to look forward to. Darshan, global equity is not looking great.
It's not. Commodities are doing well compared to equities, but not the case with equities because Japan is down, Hong Kong is down, and the SGX Nifty is indicating a gap down of almost 35-36 points. So it may pretty much recover by when we start for trade. But as of now, it seems that the SGX Nifty is indicating a negative outlook. What did the ADRs do? Dr. Reddy's, which has not been performing, managed to inch up almost 1.5%. Vedanta, Tata Motors and ICICI Bank were the other gainers in trade yesterday. The other stocks that moved out were HDFC Bank and Wipro. Infosys was the only one that didn't manage to do well. So tech as a basket didn't do well on the ADR side. Now, crude has managed to inch up today. It's up almost 0.2%. We're inching in close to the $65 mark on the Brent, and on the WTI, it's inching close to the $62 barrel per mark. So after 2 days of more than 1% fall in morning trade, we're seeing a little bit of stability coming in as far as crude is concerned. Metals did well. If you're looking at the base metals, all of them, except for tin, which was down almost 1% in trade, all the others did well. So aluminium was up 0.5%, copper was up 0.5%. 1.5%. Zinc, nickel and lead, all of them were up anywhere between 1.5 to 2%. Now, opening cues in China do indicate it's slightly mixed because zinc is trading 0.6% higher, but aluminium and steel are trading slightly weak in opening trade. Most of the precious metals are trading with a positive to flat bias in trade currently. Now, FIIs in trade yesterday, if you're looking at the fund flows, they bought in almost 7,028 crores. But remember, this includes the big TCS block deal that will also come in, and DI has bought in almost 1,600 crores in the cash market. Now, if you're looking at which were the sectors that moved in trade, so the mid cap, the small cap did extremely well. The Nifty Bank managed to inch up; it was up almost 0.3%, but the Nifty did much better. Now, the PSU Bank index stocks did rally. It came off the highs of the day. At one point of time, it was up almost 5%, and the Nifty Realty Index managed to do well. It was up almost 1.5%. Nifty IT was the big laggard, and the main reason was TCS, which was down 5%. It has a sizable weight on the index, and that is why it was down in trade. Wix also managed to stay flat in trade. It was trading at levels of 14.5 currently. Now, the Nifty was up just 5 points. Axis Bank, ICICI Bank, HDFC. So the financials managing to hold on. The big drag was coming in only on account of TCS block deal. So 21 points was shaved only on account of TCS. But still, we managed to end above the 10,400 mark in trade.
What about the levels, Darshan, with regard to futures? How is it going to pan out? Because yesterday we saw a lot of movement. We saw it move into the green and then fall back into the red.
Yeah, so day before we saw 200-point rally on the Nifty. Again, there was this 100-point rally, and then suddenly we managed to crash. So that's what we saw. We saw the short covering on the Nifty continues. We ended with a positive bias, but nevertheless, it was mainly on account of the movement that came in, was mainly on account of short covering. Now, if you look at the Nifty Bank, that is where we will see that there also a short covering was coming in because the open interest was down close to 5%. Now, in terms of where are positions taken, this is where the market is currently 10,400. So again, put writers are looking to defend 10,400. This is the total open interest. So it seems that put writers, or the bulls, they are looking at levels of 10,400 as the big support level, and resistance will come in at 10,500 to higher levels. So 10,400 to 5,000 is the broad range that the market is looking at this point of time. What happened yesterday, we ended above the 10,500 mark in trade. Put writers were still active because the market was going up. So they actually added positions, and surprisingly on the 10,600 there was enough call shedding, and these positions were taken at the 10,700 level. That means that the bears have actually taken one step behind. They believe that the resistance could shift from 10,500 to 10,600. So it all remains 10,400 to 10,500 broadly remains where the market is looking at currently. In terms of PCR, the Nifty PCR was flat. The Nifty Bank PCR came down slightly weaker in trade yesterday. The other stocks that, and stock specific, what are the stocks that you need to watch out for? Bank of India, that one was up almost 7% on high open interest build-up of almost 9%. You had M&M Financial, which moved on high open interest build-up of 10%. Then again, you have counters like CET, which moved on decent open interest build-up. It was up 3% on the open interest build-up of 7%. The other factors are TCS, obviously the big block deal, and that's why the open interest build-up was also so high of 55%. And finally, Apollo Hospitals saw fresh shorts. Open interest build-up was close to 14% on the counter.
Thanks so much for that, Darshan. There's a big story that came up last evening. In fact, the big update of the day, the fact that RBI has decided in the wake of the PNB fraud case that amounted to over 12,700 crores to ban banks from issuing letters of undertaking and letters of comfort. In a notification, the RBI said that the decision comes into force with immediate effect. Vishwanath Nair tells us the RBI's rationale behind this move in this report.
What has happened essentially is that letters of undertaking and letters of comfort were two products which were largely used by Indian banks to be issued to the foreign branches of other Indian banks so that their customers could get some form of trade credit. Now, the RBI while it has not really tried to ban it in the past, now has seen the recent Nirav Modi fraud event and has gone ahead and asked banks to stop issuing these certificates. What the banks can do instead for trade credit is issue letters of credit and bank guarantees, which is what most international banks do out there for trade credit. Domestic banks are allowed to do this so that they can get credit for their customers. But LOUs are, remember what happened with the Nirav Modi case was that associates of Nirav Modi got in touch with the Punjab National Bank's employees and issued fraudulent LOUs. Which were then identified and which were approved by the foreign branches of other Indian banks, and thereby money was removed without actually any due process being followed. So to avoid any such situation, this is all part of a number of steps that the Reserve Bank has been taking in this specific case. The Reserve Bank of India had put out a notification on its website which said that letters of credit cannot exceed 1 year unless there are some special circumstances. So it is doing a lot of these measures to try and curb any potential frauds that may develop in the coming years.
Let's move on now and take a check on the rupee and the bond market. Saloni Dhanuka is here to tell you all about it. Morning, Saloni.
Good morning, Alex. So the rupee yesterday ended higher for the second consecutive session and ended 15 paise higher at 64.89 levels against the dollar, which is well below the crucial 65 mark. Now remember, the home currency strengthened after better than expected inflation data eased near-term fears of interest rate hike by the RBI. Now rally in local equities amid heavy foreign fund flows also supported the Indian rupee. Well, speaking of the bond market, sovereign bonds declined yesterday as yields on the new 10-year benchmark security ended 2 basis points higher at 7.65%. Now remember, the yields initially fell to 7.59% on softer than expected CPI print in the early morning trade. Speaking of foreign fund flows into debt market, global funds reduced their rupee debt holdings yesterday. They reduced their portfolio by approximately 800 crore according to NSDL data. Well, on the global front, dollar index trades little unchanged after ending lower for 3 consecutive sessions. Remember, the index ended 0.3% lower yesterday after inflation report showed that consumer prices matched expectations in Feb. Elsewhere, euro rose as much as 0.6% yesterday to briefly break above the $1.24 mark. Elsewhere, pound trades near 2-week high against the dollar on the broad-based dollar weakness. And lastly, speaking of dollar rupee, it is trading at 64.85 levels against the dollar in the non-deliverable forward market, which indicates a flat to positive opening for Indian rupee in today's trade, Alex.
Thanks for that, Saloni. Well, those are the cues for the rupee and the bond market, but there's an update for you. The Supreme Court has extended the March 31st deadline to link Aadhaar with other services indefinitely. The extension will be in place till the Constitutional Bench delivers its verdict on Aadhaar. This comes at a time when mobile services providers and banks are pushing users to link their Aadhaar with mobile numbers, PAN cards and bank accounts. Arpan Chaturvedi tells us the implications of this interim order in this report.
Well, with this extension, basically what the Supreme Court has done is that all the Aadhaar linking deadline, whether it's your mobile, your bank account, all of them stand extended until the hearing and the judgment is pronounced in the Aadhaar case. The one exception is, of course, that all the subsidies which are governed by the Section 7 of the Aadhaar Act, the social service schemes, those are exempted from this extension. Apart from that, in the main hearing, Mr. P. Chidambaram has concluded his arguments and he is arguing on this challenge which relates to passing of Aadhaar as a money bill. And Mr. Chidambaram has argued that powers of money bill, which bill is a money bill, is a very strict criteria, and not just any bill can be passed as a money bill just to bypass the powers of the Rajya Sabha to consider that, as well as the powers of the President to send it back to reconsideration to the Parliament. And he said that Aadhaar bill, there are provisions which have no relation to a money bill, and on those grounds he argued that the entire Aadhaar bill needs to be struck down as violative of the Constitution, and it's not, as it is not a money bill.
Well, and speaking about the Aadhaar and the use of the Aadhaar, the Unique Identification Authority of India has tweeted saying that Aadhaar is mandatory for new bank account opening and in case someone is applying for a Tatkal passport. Let's move on now. ICICI Securities has filed a revised draft red herring prospectus with the Registrar of Companies just a week before the IPO hits the primary market. People in the know have told Bloomberg Quint that ICICI's broking and merchant banking arm is looking to lower its valuation substantially. Sajit Mangat sums up all the developments in this report.
Well, ICICI Securities, is all set to come to the market as early as next week. We understand from our sources that the Securities and Merchant banking arm of ICICI Bank has filed the updated draft red herring prospectus with SEBI on Tuesday, and in the next 2 days it is expected to file the red herring prospectus with the registrar of companies. The company is in the process of coming out with its maiden IPO, which will primarily be offer for sale by ICICI Bank of up to 22% stake, and that would mean that the ICICI Bank would be raising close to 4,000 crores as part of the IPO process. Now the interesting thing is that when ICICI Securities filed its draft red herring prospectus last year, it sought a valuation of nearly 25,000 crores. Now that has come down drastically, and now the total valuation is coming to nearly 18,000 crores, and that's primarily because of market conditions and the fall in market that has happened in the last 2 to 3 months, where markets have fallen substantially, and that has hampered valuation of many of the companies which are coming out with IPO or will be coming out with IPO in the next month or so. We wrote to ICICI Bank and ICICI Securities seeking clarification, but we didn't get any response. But we understand that there's a roadshow which is expected as early as by the end of this week, and the IPO is expected to open next week, and the entire process of IPO is expected to be completed by the end of this fiscal, which is March 31st.
On to the stocks of the day and stocks in the news. Shraddha Babla is here with a list to tell you about. Shraddha, I was trying to sneak a glance at your list. I couldn't see anything.
I'm surprised because there are quite a few, Alex. Starting off with Future Retail, which has signed a 50-50 JV pact with Oman-based Khimji Ramdas, and that is for FPB stores in Oman and also other GCC states. Then you also have IRB Infra and its subsidiary, which have emerged as preferred bidders for 2 road projects in Tamil Nadu worth 3,465 crores. Then you also have a ET report which says that IHH will make an open offer for Fortis non-promoter shares, and they've also said that the Malaysian company is readying a $1 billion war chest and has roped in Citi while being in talks with banks for raising funds, so watch out for that name. You also have a Mint report which talks about Torrent Pharma looking to raise about 1,500 crores by selling shares to institutional investors, and this largely is on account of it preparing to make a bid for Sanofi's generic drug unit. So that's the Mint report. Centrum Capital is looking to enter insurance and stressed assets business. That's again a Mint report, so watch out for Centrum Capital. Then on the back of bulk deals, we have IRB Inbit, where Nomura has bought 64 lakh shares yesterday, and the seller was DB International. You also have Ashapura in Made Fashions, where the promoter Harshad Thakkar has bought 1.3 lakh shares. Remember, the promoter had also bought 50,000 shares on 12th March, so some buying happening as far as Ashapura and Mates is concerned. So those are some of the stocks to watch. Absolutely.
Thanks so much for that, Shraddha. Let's move on. The BJP has stamped its authority in the northeast after its unprecedented victory in the recently concluded state elections. Sunil Deodhar, the RSS Pracharak and BJP's in charge in Tripura, told Bloomberg Quint that leftist ideology cannot survive when they are not in power. Listen in.
Leftist ideology or leftist cadre cannot survive when they are not in power. Because before they come to power, there is really a spark in that power. There is a current, there is a zeal to do something for their ideology. They can go anywhere, fight anywhere for party, jhanda uthao, do anything. But as soon as they come to power, then from the state government, they make certain arrangements by false BPL cards and many other frauds, and they see that their cadre will get some money to run their house. And that is why they are totally dependent on government. The same thing happened in West Bengal. So now if you see, in West Bengal, left party is finished, almost finished, because the total cadre left party and joined the ruling party.
Yeah.
today also thousands of left cadre are eager to join BJP in Tripura. But we have stopped them because time and again we have said that there are many crimes committed by left cadre in past. So unless and until we investigate about those crimes, we are not open to take all criminals in our party, those who have committed heinous crimes in that state. But I am quite sure that now the left ideology will not come back again in Tripura, because almost all left cadre are today itself they are interested in joining Tripura BJP. Not only the cadre, political cadre, but also all unions. All the offices of C2 are closed. All the employees union are joining Bharatiya Mazdoor Sangha in Tripura because they cannot survive without power. That is their problem.
And speaking about elections and politics, as talk of a united opposition does the rounds, UPA chairperson Sonia Gandhi met leaders of 19 opposition parties for dinner at her residence last evening. The guest list included Sudeep Bandopadhyay of the TMC, Kanimori of the DMK, Ram Gopal Yadav from the Samajwadi Party, and Sitaram Yechuri and Adi Raja from the left parties. Those excluded from the meet include leaders of the TRS, the BJD and the Telugu Desam party. Sonia Gandhi has called for opposition unity, saying parties should set aside their differences to get together in the larger interest of keeping the BJP out of power in the 2019 Lok Sabha elections. Now, there's clearly lots to talk about both on the international side as well as in domestic markets, and you'll find all of that live on Bloomberg Quint Live. But there are several stories on the website that you should consider reading. Here are just a couple of them. The Railway Ministry needs to revisit passenger and passenger fares and other tariffs to recover operational losses in a phased manner and reduce losses in its core activities, the CAG has said. The Bhushan Power and Steel insolvency process has been put on hold by the NCLT, which has asked lenders not to finalize the sale of assets till a plea from Liberty House for considering its bid is heard. Well, that's all we have for you on a Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.